Hi students, welcome back to second video of economics class 12th, and today in this video we are going to discuss about economic variables, that is stock and flow and circular flow of income two sector model. So firstly we can discuss what is economic variable and what is stock and flow. So before analyzing economic variable, so firstly what is variable? So what is variable? In 10th class mathematics you studied, na? What is variable? So variable is a changing magnitude. Variable is a changing magnitude. So economic, for example, y is equal to 2x plus 3. Here y and x are known as variable because the value of x and y will always change. Got it? At the same time, for example, if we give the value of x as 1, then value of y will be 2 into 1 plus 3, that is equal to 5. At the same time, if we give the value of x as 2, then the value of y will be 2 into 2, 4 plus 3, that is equal to 7. Okay, so the value of x and y are always changing, so that's why x and y are known as variable. And one more thing, in this equation, this y is known as dependent variable and x is known as independent variable. So what is the reason of dependent variable? Because the value of y depends on the value of x. When the value of x changes, automatically value of y will change. So that's why y is known as dependent variable and x is known as independent variable. So coming to our topic, that is economic variable. So in economics, in 11th class we studied a lot of variables. That means demand. Demand will change according to the situation, according to the person. Next one, supply, it is also changing. Then production, then total product, marginal product, average product. These are the examples of economic variable. Okay, so this economic variable we can classify into two types. First one, it is stock, and second one, it is flow. Stock and flow. So stock means it is an economic variable, or it is a variable which can be measured at a particular point of time. Keep in mind, at a particular point of time. For example, individual A has a saving account balance on 1st January 2020 as rupees 50 lakh. So this 50 lakh, it is a saving account balance and it is measured at a particular point of time, that is 1st January 2020. So this variable is treated as stock variable. So another examples are capital, then water in a tank. Next one, distance between Kerala and Gorakhpur, etc. These are the examples for stock variable. Okay, stock is a variable which can be measured at a particular point of time. Next one, that is flow. Flow, from the word itself we can understand. Flow, it is a variable which can be measured during a period of time. Stock is particular point of time, whereas flow is measured at a particular period of time. For example, suppose student A, he is getting rupees 500 as pocket money in each and every month. So in each and every month, this particular student is getting 500 rupees. In January he is getting, February he is getting, March he is getting is 500 rupees. So this pocket allowances we can treat it as flow variable. Next example for flow variable, that is interest on deposit. In each and every month or in each and every year you will get interest on your deposit. Okay, so that is stock and flow. First one, stock, it is a variable which can be measured at a particular point of time, whereas flow is a variable which can be measured at a particular period of time.
I think you
So,
understood the meaning of stock and flow. Now we can discuss some differences between stock and flow. So the first difference, that is, stock refers to the value of a variable at a point of time, whereas flow refers to the value of a variable during a period of time. That we already discussed. Stock is measured at a point of time, whereas flow is measured at a flow is a variable which is measured during a period of time. And second one, stock is not time dimensional. It is measured at a specific point of time. Got it? And in the case of flow, flow is time dimensional. It is measured per hour, per month, or per year. So salary is an example for flow. So salary we are getting per month or per week, like that. Okay. And in the case of stock, the third difference between stock and flow, stock impacts the flow. Greater the stock of capital, greater is the flow of goods and services. Here, stock impact the flow. Got it? So suppose, for example, in an economy stock of capital is very high, so definitely it will increase or it will rise the production capacity of goods and services. If the production capacity is high, then they can produce more output. It will lead to more flow of goods and services in an economy. And in the case of flow impact the stock. Greater the flow of income, greater is the stock of wealth with the people. Example, that is, if the income of the person is high, for example, per month a person is getting 1 lakh rupees as salary, then automatically his wealth will be very high. So these are the important differences between stock and flow. First one, stock is a variable which is measured at a point of time. Flow is measured during a period of time. Then second one, stock is not time dimensional, whereas flow is time dimensional. Third one, stock impact the flow. At the same time, flow also impact the stock. Now we can analyze some more example for stock and flow variables. Okay, first is stock variables. First one, wealth. Second one, labor force. Third one, capital. Fourth one, quantity of money or supply of money in an economy. Fifth one, bank deposit. Sixth one, water in the overhead tank. Seventh one, distance between Delhi and Mumbai. Eighth one, rice stored in a godown. Ninth one, population of a country. So these all variables we can measure at a particular point of time. For example, on January 1st, 2020, there may be rupees 20 lakh in your bank account. So this bank account is measured at a particular point of time. The time is January 1st, 2020. Whereas in the case of flow, the examples are: first one, income; second one, expenditure of money; third one, capital formation. What is another name of capital formation? Investment. Okay. Then fourth one, change in the supply of money in a country. Fifth one, interest on capital. Sixth one, leakage of water from the overhead tank. Seventh one, speed of a car going from Delhi to Mumbai. Eighth one, sales of rice. And ninth one, number of birth. First one, income. Income we are getting, or salary we are getting per month or per week, per day, like that. Okay. Then second one, expenditure of money. Third one, capital formation. Remember that capital is stock variable, whereas capital formation, that is change in capital or investment, it is considered as flow variable. And in the case of quantity of money, that is stock variable, but change in quantity of money, that means change in supply of money, is a flow variable. Next one, interest on capital, it is flow variable. So here remember one more thing, that is bank deposit, it is stock variable, and if you get an interest on this bank deposit, it will comes under flow variable. Then sixth one, leakage of water from overhead tank. So water in the overhead tank at a point of time, it is stored, and the leakage of water from that tank will be a flow variable. Then speed of car going from Delhi to Mumbai. So if you are a good driver, then you can easily understand, that means the speed will always change. Okay, so distance between Delhi and Mumbai, it is a stock variable, whereas speed of a car going from Delhi to Mumbai, it is a flow variable. Then sale of rice, then number of birds in a country. Keep in mind one more thing, that is population of a country is a stock variable, but number of birds or number of birds, these variables are considered as flow variable.
Okay, coming to our next topic, circular flow of income. It is also known as circular flow of money. So before analyzing circular flow of income, firstly we can analyze sectors of an economy. So in macroeconomics, economy is divided into 4 sectors. So they are, first one household sector, second one firms, third one government sector, and fourth one external sector or rest of the world. First one, household sector. So household sector include consumers of goods and services. Consumers of goods and services, they are including in household sector. And one more point, that is they are the owners of factors of production. You know, there are mainly 4 factors of productions are there in economics. First one, it is land. Second one, it is labor. And third one, it is capital. And fourth one, it is organization. So the owners of these factors of production is the household. Okay, so you at the same time you know the remuneration for these factors of production also. So for land, what is the remuneration? For land it is rent. For labor it is wage. For capital it is interest. And for organization it is profit. So these are the 4 factors of production: land, labor, capital, organization, and these are the 4 factor incomes or remuneration of factors of production: rent, wage, interest, and profit. And coming to the next sector, that is firms. So in the case of firm, it include all the producing unit of an economy, all the producing unit of an economy. And for producing these goods and services in this sector, these firms require factors of production. So firm will purchase or firm will hire factors of production from household sector. And the third one, government sector. So here government will act as a welfare agency as well as act as a producer. And the fourth one, that is external sector or rest of the world. So this external sector is related with the export and import of goods and services and inflow and outflow of capital. Got it? So if the economy is a 2-sector economy, so there will include only household and firms. This is 2-sector economy. If the economy is a 3-sector economy, then along this household and firm, government will sector also include. If the economy is a 4-sector economy, then the economy will include household, firm, government, and external sector. And here household, that means two sector economy is known as a closed economy. At the same time three sector economy also known as closed economy, because in this two sector and three sector economy there is no any link with the rest of the world, whereas four sector economy is known as open economy. And coming to the interdependence among these sectors. So here four sectors are there. So each and every sectors are depends on others. For example, household sector. Household sector means consumer of goods and services. So from where they are getting these goods and services? They will get from firm. So household is depends on firm. At the same time firm is producing goods and services. Then how they can produce? Without factors of production they cannot produce. From where they will get these factors of production? From household. So household and firms are interdependent with each other. At the same time government sector. So government is getting tax and non-tax revenue from household and firm. So government is depends on household and firm. At the same time this household and firms are getting welfare as well as law and order from government sector. So household and firms are depends on government sector. And fourth one, that is external sector. External sector means production of or import and export of goods and services. So in the case of import and export of goods and services, this household required goods from foreign country, firms required goods from foreign country, then government also sometimes required for goods from foreign country. So external sector is also depends on household, firms and government sector. So this interdependence, the interdependence among these sectors will lead to intersectoral flows. Keep in mind this interdependence of four sectors will lead to intersectoral flows, and this intersectoral flow is also known as circular flow. And in your syllabus it is included only the circular flow of income of two sector model. Two sector means household and firm. We will not discuss about three sector and four sector model because it is deleted from your syllabus. So coming to the circular flow of income of two sector model. So if the economy is a two sector model, then what are the sectors included in that economy? Household and firm. Okay, so firstly firms need to produce some goods and services. So without land, labor, capital and organization, firm cannot produce goods and services. From where they will get this land, labor, capital and organization? From household. So first flow, that is flow of factors of production from household to firm. So that is the first flow. Flow of land, labor, capital and organization. Okay, so by using this land, labor, capital and organization, firm will produce some output. At the same time, by using this land, labor, capital and organization, firm need to pay the remuneration to household. So what are the remuneration? For land it is rent, for labor it is wage, for capital it is interest, and for organization it is profit. So after using this land, labor, capital organization, firm need to pay remuneration to household. So there is a flow of money from firm to household in the form of rent, wage, interest and profit. So that is the second flow. Rent, wage, interest and profit. Okay, now household got some money in the form of rent, wage, interest and profit. Now at the same time firm is produced some output with themselves. So household require this output. Then how they will purchase? By using this rent, wage, interest and profit, they will purchase goods and services from firm. So there is a movement of goods and services from firm to household. So that is third flow. Goods and services. Goods and services. Okay, so firm will not give this goods and service at free of cost. So household need to pay some money for these goods and services. So there is a flow of money from household to firm. That flow is known as expenditure on goods and services. Simple one. 4 flows are there. First one, initially firm purchase or hire land, labor, capital organization from household. Then as a result there is a movement of rent, wage, interest, profit to household. Second one, household purchase goods and services from firm. So there is a movement of goods and services from firm to household. And lastly, household need to pay money for these goods and services, that is expenditure on goods and services. Okay, coming to this flow. Here some flows are in the form of money and some flows are in the form of goods and services. Is it now? Yes. So this land, labor, capital and organization, whether it is in the form of money or goods, it is in the form of goods. Okay, so this flow is known as real flow. Real flow means flow of goods and services among sectors. At the same time, from firm to household, there is a flow of rent, wage, interest and profit. Whether it is in the form of money or goods, it is in the form of money. So this flow is known as money flow. This flow is known as money flow. At the same time, from firm to household, there is a flow of goods and services. So it is in the name itself we can understand it is in the form of goods. So this flow is also a real flow. At the same time, after that, household need to pay money to firm. So that is expenditure on goods and services. That is money flow. So this circular flow is divided into 2 parts. First one real flow and second one is money flow. Real flow means flow of goods and services among different sectors, and money flow means flow of money among in between different sectors. Okay, so here real flows are flow of factors of production from household to firm and flow of goods and services from firm to household, and money flows are flow of factor income, that is rent, wage, interest and profit from firm to household, and expenditure on goods and services from household to firm. We are going to prove that total goods and services produced in an economy is equal to total factor income, that is equal to total expenditure on goods and services based on this circular flow. Okay. For example, suppose by using this land, labor, capital and organization, the firm produced 100 rupees commodity. 100 rupees commodity. Okay. So after producing these goods, firm need to pay some remuneration, that means remuneration to household. So remuneration may be in the form of rent, in the form of wage, and in the form of interest, and in the form of profit. So for example, rent is equal to 30 rupees, wage is equal to 20 rupees, interest is equal to 10 rupees, and profit is equal to 50 rupees. Okay, so firm produce 100 rupees commodity with themselves. So total goods and services produced in the economy, that is equal to 100. Then after that, firm gave factor income to the factors of production, that is 30 plus 20 plus 10 plus 10 plus 40, we can change it as 40. Okay, so 10 plus 40, that is also is equal to 100. So factor income, total factor income is equal to 100. Total factor income is equal to 100. So now firm's hand 100 rupees commodity is there, and household has 100 rupees. How this 100 rupees came? in the form of rent, wage, interest and profit. And now firm need to sell that 100 rupees commodity. So what the household will do? They will demand this commodity which are produced by firm by using this 100 rupees. So that is expenditure on goods and services, that is 100 rupees, that is equal to 100 rupees, and that 100 rupees will come to firm and firm can sell their commodity to household. So in simply, total goods and services produced in the firm is equal to total factor income received by household, that is equal to total expenditure on goods and services made by household. So in this analysis we are assuming that saving is equal to 0. Saving is equal to 0. So this this circular flow of income is useful for our next chapter also, that is national income accounting. So that's all about circular flow of income. It is interdependent. This circular flow of income shows interdependence among different sectors of economy, and this circular flow has two parts, real flow and money flow. Real flow means flow of goods and services in between different sectors. Money flow means flow of money among different sectors. Okay, so next chapter, that is national income accounting, that we can discuss in our next video. Okay, thank you.